Today's highlights: the probability of a rate cut has dropped below 50%, the basis has turned negative, and Bitcoin is facing a crucial battle to defend $93,000. Institutional disagreements are escalating. Bitcoin has fallen below last year's closing price. Does the bull market still have a chance? AI keeps running into bugs, and if Pump.fun's buyback doesn't work and can't hold the bottom, could it become the last straw that breaks the bull market? Monday, November 17th, this is the BitcoinTV Chinese channel, Bitcoin Spot. I'm Michael. Let's first take a look at the most important data headlines from the past 24 hours on P. These past couple of days, the entire market has been watching the Federal Reserve's October meeting minutes to see how they're written, because everyone wants to know whether Jerome Powell actually wants to continue cutting rates. Last month, the interest rate was just lowered to between 3.75 and 4, but then Powell said that a rate cut by the end of the year isn't certain, which immediately sent the market back to square one. Susan Collins from the Boston Fed also added fuel to the fire. She said, "Want easing?" The threshold is still very high. So after her comments, plus the entire US government shutdown and data blackouts, the Fed is basically driving in the dark. Whether or not there will be a rate cut in December is the most important question the market is speculating about. Now, market pricing has changed. The probability of a 25 basis point rate cut has dropped to 49%, while the probability of no rate cut or even a rate hike has risen to 56%. With the macro environment shifting, Bitcoin has naturally started getting pummeled, dropping below $94,000 intraday and hitting a low of $93,000, its worst decline since May this year. Right now, everyone's mindset is to get out if they can. Leverage is shrinking, risks are being reduced, so what is everyone waiting for? Everyone's waiting for the Federal Reserve's meeting minutes to be released to figure out which direction this story is headed. So from a technical perspective, bearish signals have already appeared, and Bitcoin is stuck between 97,000 and 93,000. If the Fed leans hawkish, it might keep dropping. If it's dovish, Bitcoin could still have a chance for a rebound to stay alive. The basis between Bitcoin spot and futures is actually quite simple. Just subtract the spot price from the futures price, and that's your basis. What does this help us determine? It helps us gauge the current market risk appetite, the level of leverage demand, and the structure of capital. Basically, it reflects whether the market wants to take risks right now or just stay on the sidelines. So this time, the basis really couldn't hold up. It dropped below zero, meaning the futures price actually became cheaper than the spot price. What does this mean? It means the market as a whole is pulling back. Leverage is out of play, and everyone is switching to a let's not make any moves for now mode. Both the 7-day and 30-day moving averages are trending downward, which shows that both the short and medium term are weakening. Right now, the futures market doesn't even have the courage to pay a little extra to hold positions. So history tells us that when the basis stays negative for a long time, it usually means either a drop or an even sharper drop, and it could also be accompanied by a series of blowups. So with ETFs seeing outflows and leverage not yet fully cleared, this market is a textbook case of nerves stretched to the breaking point. There are two possible paths ahead. If the basis returns to between 0 and 0.5, the market can still stabilize and survive. But if the basis remains deeply negative, then we need to be ready for a version 2.0 of the liquidation storm. Looking at Bitcoin now, it has completely become a shadow of tech stocks. In the past 30 days, the correlation with tech stocks has soared to 0.80. Not only is this the highest point since 2022, but looking back over the past decade, this figure ranks second overall. It's basically, when the Nasdaq rises, I rise. When the Nasdaq plunges, I'm the first to dive. So, from a long-term perspective, the 5-year correlation is now 0.54, which is a solid positive correlation. On the other hand, the correlation between Bitcoin and traditional safe haven assets like gold is almost flatlining. Basically, if you drop, I'm not playing along anymore. To put it bluntly, the market isn't pricing Bitcoin as digital gold at all right now, but rather as a highly leveraged tech stock. In the current environment of uncertain interest rates, data gaps, and chaotic sentiment, Bitcoin is already being led around by the nose by tech stocks. If the Nasdaq continues to stay flat, chances are Bitcoin will have to crawl along with it. But if tech stocks suddenly bounce back, then Bitcoin's rebound could put on a show of perfect resonance, like riding a rocket. Alright, please like this video and turn on the notification bell. We'll help you sort through the news that's closest to making money in the outside world, and you're also welcome to join our membership. Here you'll find all our membership benefits. Feel free to take a look. Right now, the question everyone is asking the most is, are we in a bear market? Is the bear market still here? How much longer can the bull run last? In today's exclusive weekly review for our members, we shared one piece of good news and one piece of bad news. So, is this round of Bitcoin a decline, or is it a reversal? How low could it go? Where is the best entry point? We've provided a members-only weekly review, so let's take a look. Back in April, with just one comment from Trump about raising tariffs, Bitcoin was immediately pushed down to 74,000. After that, it stumbled its way up to 126,000. But recently, the market has changed again. This Sunday's closing price actually fell below last year's closing price. In other words, this round of correction has completely wiped out all of Bitcoin's gains for this year. Every investor who saw this took a deep breath. Bitcoin really is like a tornado. When it rises, it's incredibly fierce, and when it falls, it's like free fall.
Some institutions believe that Bitcoin is currently in a midterm correction within a bull market, with structural support between $91,000 and $95,000. Some institutions have lowered their year-end and midterm targets, warning that if Bitcoin doesn't recover to $100,000 soon, this correction could deepen.
The financial guardrails are shifting. We've got news after news every single day about the financial guardrails becoming more digital economy, things that are necessary for the network effects to kick in. All of that has happened. We still see inflows from retail.
BitLoy CEO Hunter Horsley pointed out that some investors adhering to the 4-year Bitcoin cycle model are anticipating a price downturn in 2026 and therefore are choosing to sell early in 2025 as a precaution. At the same time, ETFs have accumulated over $25 billion in funds, pushing Bitcoin's asset scale to around $169 billion at one point.
All right, everyone understands that ever since institutional ETFs entered the scene on January 10th, 2024, the entire operating system of the Bitcoin world has changed. Because institutions have arrived and the scale of capital has shifted, we need to completely rethink the logic of the entire market. But here's the question, what about recently? Both long-term and short-term holders are selling, and our short-term spot copy trading is also making tactical stop losses. So, as if everyone has agreed, no one wants to support the market anymore. So how do you expect it to go up? What's even more awkward is that the fear and greed index has now dropped to extreme fear. The market is as cold as if the power's been cut, but what I want to tell everyone is that our OK spot copy trading has started a new round of bottom accumulation. Right now, we still have over 50% profit, and this is the best time to set up spot positions. Let's witness together how to gradually become wealthier and how to find the best entry points when the market is falling and sentiment is at its lowest. All right, let's take another look at Pump.fun. This is a wealth-generating machine in the Solana meme ecosystem, right? People are making money like crazy. But unfortunately, platform Pump has been getting hammered lately and just can't seem to recover. In order to make a comeback, they pulled out a big move, spending $170 million on a buyback and launching a so-called chaos mode with an AI assistant feature. But as it turned out, the first day it went live was truly chaotic. There were all sorts of issues: excessive minting, creators' wallets being drained, users' funds getting locked up, a whole collection of problems that sent the community into an uproar. So what was supposed to be a comeback with new features ended up being a disaster, like rushing headlong into a pit. Right now, the bear market outside is getting worse, and inside bugs are flying everywhere, so whether Pump.fun can still be saved, no one dares to make any guarantees.
According to the data, Pump.fun's daily revenue still remains above $1 million, ranking among the top 5 protocols overall, but it's clearly dropped from the peak of $4 million earlier this year. The number of new tokens issued each day has also fallen from a high of 70,000 to less than 20,000. Although the number of active wallets has declined, it has still remained steadily above 100,000 over the past 3 months. Overall, the drop has been limited.
To put it bluntly, if Pump.fun's institutions are willing to spend several million dollars to pump the price, I think that's pretty heroic. But if spending those millions doesn't actually push the price up, then people are going to start questioning things. Out of these millions in trading volume, how much is actually from real people and how much is just bots faking it? Just how big is this bubble, really? If one day this bubble bursts, how far will the price fall? It really is a bottomless pit. It's not that Pump.fun isn't working right now, it's that I think the entire meme sector has completely lost its heat. Everyone's gone from being fired up and jumping in to being mercilessly trapped, and on top of that, the overall market isn't performing. The sector has no momentum, and bots are running wild. With these 3 pressures combined, it's honestly pretty tough for Pump.fun to hold on. So after you go through this cycle, you'll realize that just holding onto your Bitcoin and not constantly trading coins might actually give you a much higher return and lower risk than chasing every meme or hot trend every day. This is what it means to seize the certainty of the entire cycle. How much certainty do you actually have in your hand? Here, there are both overnight riches and carefully crafted scams. This is a chaotic and lawless dark forest, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the end point of consensus is equality. BitcoinTV will guide you through the fog, help you see the future, and let us all gradually become wealthier together. Japan's 50% tax rate is about to increase, and 105 compliant tokens can now be listed directly. Banks are now trying to grab a share of the crypto market. With an annualized return of over 10% crushing USDT, can multi-coins bet on ENA become the next explosive legend? As for our Japanese channel, its growth hasn't been very fast. Why is that? There are too many rules and restrictions in Japan. As you all know, Japan used to tax crypto income at 55%. Now, news from our Japanese channel says that not only has Japan lowered the tax to 20%, just like stocks, but the Bank of Japan has also made a major move. This means that all banks can now apply for a crypto asset trading license. In the future, when you open your Japanese banking app, you'll not only be able to check your yen balance, but also easily buy and store crypto and even manage your assets. So this move by Japan isn't just a minor tweak or a simple tax cut, it's about directly integrating traditional finance with the crypto world. This is a major step.
Japan's Financial Services Agency seeks comprehensive crypto market reform. 105 major crypto assets, including Bitcoin and Ethereum, will be recognized as financial products and regulated under the Financial Instruments and Exchange Act. This includes system upgrades for disclosure, insider trading prevention, tax cuts, and letting banks enter the market. The legislation is expected to go to the National Diet for review in 2026.
No matter how regulations or any framework were going to be established, it seemed like this thing would be pretty much unstoppable. So I thought, okay, if you can't beat them, join them.
According to Asahi Shimbun, Japan will tighten rules for listing tokens on crypto exchanges, requiring mandatory disclosure for all 105 tokens. Exchanges must reveal key risks, such as issuer trustworthiness, blockchain robustness, and price volatility, to improve transparency and reduce the risk of users being misled.
So, this major policy change in Japan is an attempt to use regulations to block so-called loopholes in the crypto market, right? Previously, some people used insider information to know in advance which coin would be locked, issued, or delisted. They could position early and front-run the market. In other words, set up a rat's nest. But now in Japan, all of that is considered a violation. If you get caught, you're definitely in trouble. For retail investors, this is definitely great news because taxes have been reduced, and with more banks coming in to support newly issued coins, both capital and talent might soon flow back from Singapore and Hong Kong to Japan to Tokyo. So Japan's regulations are becoming increasingly clear. I believe Japan's position in Web3 will only get stronger in the future. It's much more solid than Singapore. There's a stablecoin that's growing very rapidly right now, called USDE. What's its background? It's a stablecoin that combines the three major trends of the multi-coin and Ethena public chain ecosystem. It tokenizes and packages perpetual contract assets into a single coin. So, Ethena is responsible for building the system, and USDE is its digital dollar, its stable coin. And compared to the old school model of USDT and USDC, where the interest from government bonds has nothing to do with you, Ethena directly offers an annualized yield of around 10%. This return is significantly higher than traditional stablecoin investment products, so it's only natural that the market is heating up right now.
In the first 2 years after USDE was launched, its circulation peaked at $15 billion. After the market crash on October 11th, it fell back to around $8 billion, firmly holding its position as the third largest digital dollar stablecoin. USDE is regarded as a core collateral asset by Binance and Bybit, with its liquidity and use cases steadily expanding.
We go through those periods of, a lull in funding rates like we've seen, where I was pretty pleasantly surprised by, I think, the retention of USDE supply through those periods of time. And what you're seeing now is, the rate market isn't even sort of near froth levels at the moment, and we're growing faster than we ever have.
The team's background has become a key support. Founder Guy Young comes from Cyprise Capital Management. The CTO is an early BitMEX employee, and most team members are seasoned industry professionals. During Bybit's $1.4 billion hack and the $20 billion liquidation wave on October 11th, Ethena's system maintained normal redemptions, demonstrating outstanding risk management capabilities.
So, stablecoin investment products have already become a red ocean. However, I want to remind everyone that the exclusive investment channel we provide to our members, the buying product has not only been running for over 3 years, but our short-term 3-month investment projects have an average annualized return of about 15%, while the 1-year return is around 35%. This is a decentralized capital investment product we offer to our members, and anyone with Chen, you can participate. Moreover, we have now launched a Bitcoin-denominated investment product with a stable annualized return in Bitcoin of over 6%. After the first phase ends, I estimate the return will be around 8%. We challenge all institutions. If you're not convinced, come and compete. You can use the website link shown on the screen to connect your Binance Chain wallet and see how this contract is performing, and whether it's worth participating in or paying attention to. Alright, here's a quick update.
Today's market tells you one thing. Gold is starting to shine on its own again. Spot gold has surged directly to $4,100 per ounce, rising 0.42% just today. In short, it continues to carry the safe haven banner in turbulent times. Nothing can stop it from climbing higher. Gold enthusiast Peter Schiff directly called out Bitcoin's arch-rival Michael Saylor on October 17th, saying that borrowing money to buy Bitcoin is basically like running a Ponzi scheme. The two will face off live in Dubai this December. Gold bugs versus blockchain believers. This time, it's a head-to-head showdown. According to newly released public documents, in 2015, Bitcoin Core's funds were actually funneled through MIT and ended up being stolen, with Jeffrey Epstein and Leon Black siphoning off about $7.5 million. It sounds unbelievable, but the facts show that while the blockchain can be decentralized, money is anything but decentralized. The latest data shows that the 30-day correlation between Bitcoin and the Nasdaq 100 has soared to 0.80. Not only the highest since 2022, but also the second highest in the past decade. Right now, the two rise and fall together. Does Bitcoin want to go solo? Forget it. The market still has to take its cues from US stocks first. CoinLighter's latest update. Global ETFs are on a roll, with the number of issuances in October surging by 19% year-on-year, hitting a record high of 137. In short, Wall Street can't get enough ETFs. Bring in a few more barrels.
Alright, that's it for today. The more mature a person becomes, the more they understand this truth. The people who truly hurt you never show their knives openly. Instead, they prefer to hide in the shadows, stirring up trouble and making up stories. When they spread rumors, it's not to tell the truth, but to wear you out with explanations and trap you in the mud. Because they understand one thing best: as long as you start to waver, they've already won half the battle. So remember this golden rule: when people spread rumors, they're not exposing you, they're exposing themselves. Some people throw mud at you in advance just to force you to waste energy clearing your name, while they take the opportunity to dig up your secrets. Some people shout for a fight ahead of time just to seize the moral high ground and get ready to justify starting a conflict. So at times like this, the more flustered you get, the more composed they become. The more anxious you are, the more ridiculous they look. That's why truly strong people never need to fight rumors head on. When you stand tall enough, you can't even hear those voices. And when you walk the right path, gossip naturally falls apart. So when you stop explaining yourself, the truth returns. If you understood this, feel free to give a like. Alright, that's all for today's new episode. Here, let me mention our membership benefits again. It's our 6th anniversary, and if you join our YouTube Gold membership, you'll get USDT cashback and exclusive channel merchandise giveaways. We hope to lead everyone through this bear and bull market cycle so we can all gradually become wealthier together. See you tomorrow.